Time now for Options Insight. I'm Abigail Doolittle. Joining me from the CBO in Chicago is Scott Bauer of Prosper Trading Academy. And Scott, you know, it's cold here in New York, but I hear it's much colder there in Chicago. Before we talk stocks, have you seen anything like it? What is it like?
Brutal.
Brutal. That one word sums it up.
Brutal. I don't even want to tell you how old I am, but I've been here my whole life. It has never been this cold. And you know what? It's almost impossible to go outside. It really is.
Wow. Well, I hope it passes quickly. Well, from brutal cold to the heat of stocks in the month of January, we've had a risk yally. You know, the NASDAQ on pace for its best month since 2011, but that follows the worst month since 2008. What do you make of that kind of volatility? What does it portend?
You know, I think we've come a little too quickly here to the upside, Abigail. I'd be a little cautious going on, you know, for at least for the next couple weeks, the next month or so. Obviously, we got some very dovish speak out of the Fed, which is really helping. But earnings have been good. But this rally that we've seen over the last 3-4 weeks or so, I think anybody that's been in it, if you've been lucky enough or good enough to be in it, should probably take some off the table here.
Okay, so if, you know, a little bit too far, too fast, do you think that any sort of move down, that's just going to be a shift in sentiment? We had big risk off in Q4, now big risk on, or is there something more specific, especially since the Fed is back in play?
No, I think it's really more of, you know, just taking some risk off the table. I mean, these big moves that we've seen, these big, you know, couple 100-point moves in the S&Ps and couple 1,000-point moves in the Dow over the last 6 to 9 months, in either direction, they've been fadeable, meaning they've been very tradable to the opposite side when we've made these big moves, and I look for the same here.
Yeah, it has been wild, and volatility does breed volatility. Speaking of volatility, we're likely to see some of it not so long from now when Amazon reports. Talk to us about your trade.
Yeah, the expected move that the option market is pricing in is about $90 plus or minus. So either direction. I really like selling what's called an iron condor. Basically, it sounds odd, but it's selling a downside put spread and selling an upside call spread, looking for the stock to stay in a range. So I can sell the 1650 strike, 1640 strike put spread, $10 wide. Also sell the 1820, 1830 call spread, $10 wide on the upside, and collect $5. In a perfect world, I'm looking for Amazon to close tomorrow somewhere between 1650 and 1820. But the great thing about this, Abigail, is I sell this $10 wide spread for $5. That's my max risk is $5. So I've got basically 1-to-1 odds on this with, you know, that $90 expected move in either direction.
Nice risk-reward profile on that trading idea. Out of Scott Bauer in Chicago from Prosper Trading Academy, thank you for joining us for Options Insight. Scarlett and Caroline, back to you. As always.